In this video, I'm going to show you how to really invest in dividend stocks like a pro, regardless of whether the stock market goes up or down. You see, most people get it wrong, and frankly, even your bankers or accountants tend to overlook this too. And that is why banks and financial institutions hire me to conduct courses or seminars for their financial advisors and relationship managers. I am CF Liu, the founder of CF Liu channel, the place where financially intelligent people turn to for 100% financial insights, 0% sales talk. And today, I'm going to show you the best stocks sector to invest in to get guaranteed dividend income or cash flow for life, and the 3 reasons why this is so. Keep watching. REIT sector or real estate investment trust sector is my favorite stock sector to invest into for 3 reasons, which will become obvious in the next 10 minutes. A REIT stock is a public listed company that owns, operates, or finances income producing real estate. Emphasize on the word income producing. Now, model after mutual funds, REIT stocks provide all investors the chance to own valuable commercial real estate properties ranging from offices, apartment buildings to warehouses, hospitals, shopping centers, and hotels. The number 1 reason to invest into REIT stocks is guarantee consistency, aka consistent money flow into your bank account every 3 to 6 months. How do REIT stocks accomplish that, you may ask? To see how consistent it is and why it's so consistent, you need to understand the normal stocks dividend is only given to shareholders if the company is profitable. If it's not profitable, then no dividends for you. Now, even if the company is profitable, there is no obligation to distribute stocks dividend if the public listed company does not have a stocks dividend payout policy, or they just change their existing stocks dividend paying policy in the future from yes to no. And sometimes companies choose not to pay stocks dividend for very valid reasons. For example, like they need to use their profit, their cash flow to retain in their earnings to expand their business to other regions, to expand their production line and all that, rather than giving this money back to shareholders. If a company's stocks do pay dividends on a consistent basis, it can adopt a low stocks dividend payout ratio. For example, maybe they just pay 30% of their company net profit while retaining the remaining 70% under the company. But when you invest in REIT stocks, the REIT structure anywhere in the world requires the REIT stocks to pay 90% or more of their net profit in order for the REIT to be exempted from corporate tax. Reread that again. Because of this, because a REIT need not only pay dividends, but it also must have a minimum payout ratio. Minimum stocks dividend payout ratio of 90%, just so they can enjoy this tax exemption. In short, you have a guarantee consistency, guarantee flow of cash flow of dividend from a REIT, and you have a guarantee 90% minimum payout ratio when it comes to stocks dividend. Now, number 2 reason is about inflation hedge dividends. Now, here's a simple analogy. If you have a 1 million shares of a company stocks paying you 8 cents per share every year, you easily have 80,000 passive stocks dividend income, which you can live off to pay for your living expenses. You know that living expenses are always prone to inflation. Maybe it's 2% per year, maybe it's 5% per year, depending on where you live. But the point is, if your 80,000 per year dividend, passive dividend from stock investing is not increasing every year, or at least matching or at least increase at the matching rate of the inflation rate, then in fact you are losing the real value of your money, aka you are really losing your purchasing power. Now let's examine company stocks dividend. They are derived from net profit, which in turn, net profit are actually a factor of how much the business earns revenue in terms of revenue they generate, and also how much expenses they spend to run the business. Now, higher revenue and lower expenses brings us higher net profit. This is very understandable, which means higher dividends. Now, how much dividend a company stocks can give you from this thought process is very clear that it depends on how well they can forever grow their business and control their business expenses. And also, it depends on other factors like the nature of this business. And this can be very uncertain. For example, a new technology could make a company core business obsolete, or a change in the commodity prices could make a business suffer losses. Now, how about, let's say, business that manufacture alcoholic beverages, and suddenly, let's say a hypothetical scenario, nobody in the world wants to drink any alcoholic beverages anymore. So this company will go out of business. But for a REIT, 99% of a REIT revenue comes from its rental income from its real estate properties. Now, this is really no rocket science when we talk about rental income from real estate properties. Although this is a stocks, but you have to understand the underlying asset of a REIT stocks is actually hard, physical brick and mortar commercial property used for various types of business. Now, rental is not something imaginary. It's really hard cold cash that is paid money from the tenants to the landlord. And in the modern economy, commercial real estate is always in demand due to business demand. Whenever there's business going on, you need a premise, you need a place, you need a real estate to conduct businesses. So it does not really matter how the economic changes, or even the short-term changes and all that. So you see how resilient is the underlying asset of any REIT stocks anywhere in the world. Rental rate actually follows inflation. That is just logic. There's only one way for rental rate anywhere to go as the time goes by, and that is up, up, and up. But this discussion today on how to invest in dividend stocks like a pro won't be complete without this third point, and that is pricing power. REIT stocks with great underlying asset have this great pricing power, and I'm talking about high quality commercial real estate properties. And that means that they can secure high quality tenants who are willing to pay a premium rental rate to be located in a strategic location where the business environment is thriving. Any REIT that holds property for lease or for rent in this central business district area will have a high pricing power. In other words, these REITs have a high negotiation power where a long list of potential tenants are bidding to rent these premium properties in a premium location, and naturally you will want, if you are the REIT manager, you will always want to rent it to the highest bidder. Due to this fact, at minimum, a REIT usually have a very stable recurring profits due to a stable demand from customers, and this also allows it to raise rental prices for its existing tenants without losing businesses to a competitor over time. In a nutshell, if you invest in the right REIT stocks, then you are actually guaranteed a steady flow of increasing REIT stocks dividend income for life. And that, my friend, is how you invest in dividend stocks like a pro. Okay, if this lesson has given you an aha moment on how to invest in dividend stocks, make sure to subscribe to my YouTube channel right now. Just click and smash on the red button at the lower right of the screen wherever you are watching this. Now, subscribing to my channel is free and there's really nothing to lose by doing so. And there's everything. Now, I wanted to turn it over to you, which of these three reasons we just covered to invest in dividend stocks like REITs that you can relate to the most. Let me know by leaving a comment